Let's go to Peter Switzer, the founder of Switzer Report, of course. Pete, good to see you start off the new working week. So why did the American stocks not slump on bad jobs numbers?
Yeah, 235,000 jobs created in August, Pete. Sounds like a pretty good number, but they expected it to be more like 735,000. So it was a 500,000 miss. Now, you would have thought that would have been like, well, the US recovery is not looking as good as we thought. Why not sell off the stock market? In fact, Dow lost 74 points, nothing. I think S&P 500 down at 1 point or so. But the Nasdaq actually went up. And the thinking is this. If the job creation and the recovery is not as strong as some were predicting, therefore, the Federal Reserve, the central bank, won't start tapering or cutting back on its bond purchases all that soon. So that means there's more stimulus kind of go into the US economy. And the interest rate rise, which is expected to come earlier than Australia, that could be delayed as well. Interestingly, the Aussie dollar went up to 74.3 US cents over the weekend. So there's this overwhelming feeling that, and by the way, it is linked to the Delta strain issues. And the suggestion is less workers are willing to go to work, less people are willing to spend because of the Delta strain. And that's, in a sense, just taking a bit of wind out of the US sales. And that's the reason why the stock market hasn't overreacted, because the interest rate solution and the bond purchasing will continue.
So what will our markets do today, do you think?
It's very interesting to see how we react. The Aussie dollar going up, that's going to hurt those stocks that generally you do better with a lower currency. But there's also this feeling that cyclical stocks are going to do very well. So it's a real 50-50. Monday's a bad day because we often do follow the lead from overseas. But I just think that I did a little presentation during the week, Pete, where I looked at where was the US stock market before the coronavirus and where is it now? It's up 34% from the level it was before the coronavirus. The Australian stock market is up 5%. So we really haven't, and the reason is all these lockdowns that slowed our recovery. So I think there's always a good opportunity over the next year or so that will rise at a faster rate than Wall Street.
And so what sectors would you be eyeing off then? I guess travel stocks would come to mind.
Yeah, exactly right. All those sort of interests. But by the way, Pete, if you look at the history of recessions and crashes of stock markets, when they come out of it, it's value stocks that do really well, not growth stocks. So tech stocks are growth stocks. The ones that really do well out of a crash, and this has happened time and time again. So they're value stocks. So financials do well, materials do well. So the miners could have a second wind as well. All those and stocks that have been basically ignored during this period, straight after and coming out of the crash, they're the ones that, and they're called value stocks, that will be really favoured, I think.
Okay, Peter Switzer. Peter Switzer.
Good to see you, mate.
Good to see you, Switz.